Welcome to Acquisitions Anonymous, Internet's #1 podcast about buying, selling, and owning and investing in small businesses. Today's deal was brought to us by our friend in the franchise world, Connor Gross, and he joined us to talk about this one in the basically elder care space, which was actually one of the first times we've all ended up in agreement about the deal. So stick around till the end and see what we thought about it. I think you'll be fascinated by this one. It was pretty cool.
We'll set Acquisitions Anonymous.
Hello, another episode of Acquisitions Anonymous.
We don't have 100% beard anymore.
And thumbs downing on just the plus inventory alone.
Hey everyone, it's Bill, and I want to tell you about an event that's honestly become one of the highlights of my year, and that's Main Street Summit in Columbia, Missouri. I've been a speaker and an attendee at Main Street Summit for a couple of years now, and I'm going to tell you firsthand, it's really not your typical conference at all. It's more like 1,000 business owners, operators, and entrepreneurs all gathering in Columbia, Missouri for 3 days of practical and actionable business content. It totally takes over downtown Columbia, and they have probably 20 different venues. It's very cool. One of the things that really sets Main Street Summit apart for me is the relationships. I wrote on X after last year's event that it was great talking about business and life with people who really have become a much more than just conference buddies. You know, business really can be a great vehicle towards deep friendship if you're willing to go there with people. And that's exactly what happens at Main Street Summit. You're really not sitting in massive auditoriums. You're in intimate settings, art galleries, small classrooms, et cetera, with world-class business owners and operators who have lived the challenges that are keeping you up at night. So really, no matter what industry you're in, from plumbing to e-commerce, there are specialized tracks designed for real practitioners like you. Main Street Summit is coming up. It is November 4th through 6th, 2025. It is in Columbia, Missouri. Do not miss this chance to connect with people who really get what you're building. You can visit mainstreetsummit.com to grab a ticket, and I will see you there. I'm speaking again this year. So if you find me, come up and say hi. See you at Main Street Summit.
Yeah, my video is going to be choppy today. I don't know why. I just upgraded to the new version of Mac OS, which is always a huge mistake. Like, never do the 0.0. That's the one thing I learned working in software early in my career. Never upgrade to the 0.0. Which,
or are you AI? Are you an AI agent today?
I mean, if I could send AI to do this podcast for me, I might make it better.
You would do it.
That's what I think.
Maybe.
So people learned back in the late 90s not to trust the 0.0 version of software.
Mm-hmm. Yeah.
So our engineers came up with a brilliant idea when I was working in software, and they just skipped the 0.0 release. We skipped 6.0 and we just went from 5.1 to 6.1. And they were just like, cool, okay, let's see if this tricks everybody. And it did, unfortunately. Some people still say still had the quality of a 0.0 release. So,
Michael, you want to guess what I was learning in the late 90s?
No.
How to use a spoon. Yeah.
Oh, he had to go there.
Anyway.
We have feelings. Heather and I have feelings.
I know. We're real people. At least I am today.
So does somebody have a deal?
I do have a deal. Yes, this is an established leader in mobility and accessibility solutions. So asking price is $2.695 million. They share $4.95 million in revenue, $840K of SDE. And business description, established leader in mobility and accessibility solutions, and this is in North Carolina. This established 3-location franchise business offers a unique opportunity to enter the thriving mobility and accessibility market. The company specializes in the sale, rental, installation, and servicing of a wide range of equipment, including stair lifts, wheelchair lifts, ramps, patient lifts, and more. Key highlights: this is a proven franchise model backed by a reputable franchisor. This business leverages a successful system for operations, marketing, and customer service. Diversified product portfolio caters to a broad range of client needs with a comprehensive selection of mobility and accessibility solutions. Strong customer focus. Established reputation, trusted provider within the industry, fostering loyalty with individuals, families, commercial businesses, and healthcare providers. Favorable market dynamics, growing demand for mobility, accessibility solutions due to an aging population. This is an excellent opportunity for a qualified investor to acquire a well-established business within a high-growth market. FF&E value shown is the gross amount as shown on the tax return. Current estimated value to be used for asset allocations will be detailed in the confidential information memorandum. So they share $60K in inventory included in the asking price, leased real estate, $508K in FF&E, 17 employees. So they're talking about this is a 3-location franchise across Virginia and North Carolina, 2 locations in Virginia and 1 in North Carolina. And then they break down a financing option. It looks like they're willing to sell or finance just over $400K over 120 months. So what do y'all think?
Okay. So Heather, what do these guys do?
Well, I think this falls into the category of age at home. So there's sort of an industry around helping people who are getting older, be able to stay in their 2-story houses, or it doesn't even have to be 2 stories, a house that has stairs, in some part of it. So you've got these chairs that will take you up the stairs. So it's not an elevator, but it sort of attaches onto the side of the wall and takes you up the stairs. They said ramps, all the kinds of things that you would need to remain, for the house to remain accessible if you were disabled or, could no longer do the stairs or in a wheelchair or something like that. So I think it falls into the category of it obviously assists people with disabilities, but the growing part of the market, I would think, would be the age at home market.
Yeah, this is basically the other piece of like, okay, I need to go hire a caregiver for grandma or mom. Mm-hmm. This is like what the predecessor to that is hiring a company like this to come into the home and say, if she's going to stay here, obviously you need the caregiver, but how do we modify the home to make it accessible? I think another key thing that they do are the bathtub conversion things where they have the doors on them, that kind of thing.
Yeah.
So what does my revenue profile look like? So is this basically project work plus repair? Is that what I'm thinking? Or am I getting paid monthly for installing some of this stuff?
So that's one thing that they don't break out is how the revenue is broken down. Because when you think about it, like they say, the sale, rental, installation, and servicing of a wide range. So when it comes to installation, like installing a stair lift, that's you're selling the stair lift, you're installing it, probably subbing out that labor as a one-time project type thing. But then there's going to be some servicing. There might be some rental. I don't know if they, instead of selling it, if they're like renting the stair lift. I bet with other equipment they do. But, I think where you're going with that question, Michael, it's my first question too, is like, how does that break out? Because the economics of like a high ticket project-based one-time service look different from something that you're, leasing and getting residual revenue from.
Yeah. Well, and this typically, home installs like this don't have the same economic characteristics that are so desirable, say, like in commercial situations. So like, I don't know if you guys have ever dug in on commercial elevators and how that market works. It's super fascinating. There's only like kind of one major player in each geographical region and maybe a number 2. But by and large, like it's a total monopoly style business. And they make a lot of money from repairs and maintenance. Like it's just this enormous cash printing machine. But my house actually has an elevator in it, which is crazy. And before you judge, Heather, the reason we had
I'm
it is
judging.
You're always, before you keep judging, so the previous owner of the house had a special needs daughter. So they needed to be able to get her up and down. So that's why we have an elevator that doesn't get used by anybody. Because my kids
But it's not vacuum style. It's like a real elevator.
I'm not the Jetsons, Heather.
No, they have those now. That's why I bring it up. I've seen another franchise concept where it's like a vacuum tube in your house. So it's a cheaper way, I guess, or maybe it just works in some configurations more easily. But there is that too for the age at home type industry.
Yeah. Well, and I agree with you. And my point there was that for our home elevator, like it rarely gets used. It rarely breaks. Like there's not a huge maintenance revenue stream for this elevator because it's not getting used like a building one. And it doesn't have the same kind of, if it goes down, we just walk down the stairs, right? Like that's just like, we make it work. So, it makes me wonder about how important and how good of a business this is if you're probably just basically doing mostly project work. which is less desirable than the maintenance kind of recurring revenue stuff you could possibly get.
My hint is when they don't break out the revenue type, the revenue mix, it's usually because it's the kind that we don't want, project work. So if it's if they've got any reoccurring or recurring revenue, they're going to say it usually, and if it doesn't, it's usually a pretty good hint that this is project work. And that seems like how it would work here. You pay to get it installed, and it's a one-time deal, but it's a nice margin, and it does. I guess it reflects the fact that it's probably project work.
Yeah. And like, even if it is all project work and it's high ticket, you know, but it's a solid average ticket and solid margin, like, I still think this can be a solid business because it's attached to, as they mentioned, it's attached to a market that's growing. And, I don't see how that can reverse in any way. So I guess, like, if you were to assume it's all project revenue, i- is that really a deal breaker?
No, I don't think so. I'm just curious. It just makes me feel better when I know there's future revenue coming, and I don't have to go hunt what I'm going to kill, right? To use a African savanna metaphor. So I do have a question for you, Connor. Why is this a franchise? Like, what makes this a business I should franchise versus like going to learn the space and starting de novo?
Yeah, well, I mean, I think that you could go either route. If this is the brand that I think it is, it's a multi-brand group that also has their hands in the home care space in a number of different concepts. And so they do a lot of cross promotion between their home care brands and this brand, if it's the one that I think that it is. I think that whenever you have these high ticket project based businesses where more of the P&L, like your cost of goods sold is going to be more than your payroll is typically. And if it's a franchise where they're getting collective buying power on their inventory, I mean, I know a lot of franchises where they're saving more on their inventory costs because they're a part of this franchise than they're even paying in a royalty, in which case it's ROI positive from day one. And then any of the ancillary benefits you get from the franchise is, just gravy on the biscuit. Those are a couple of the reasons where, if it's a strong one, I think that this could make sense. It could present advantages over just going out and learning the space on your own. With that said, a friend of mine is doing this exact business out in California and is doing just that. He's learning it on his own. And if he were here, he'd tell you all the good, the bad, the ugly that comes with that.
Hey guys, I joined late.
Hey, Bill.
How's everybody doing?
Good. We're talking about this basically home mobility business franchise where did you say it was, Connor?
It's in North Carolina. Well, it said North Carolina, and then they have
Yeah.
2 locations in Virginia and 1 in North Carolina. So probably right on the border. But Bill, this is who you call when grandma, needs a caregiver, but these are the folks that come in and, retrofit the house to make it, possible for her to age in home.
Oh,
So
I'm turning 40 in a couple months, so they'll be coming to my house before you know it.
yeah, there you go. There you go. So
Put in one of the little chairs that goes up my stairs and everything.
Yep.
exactly. Yeah.
But Connor, to your point, like one of the benefits of being part of the franchise here would be the buying power, the collective buying power. Could you not approximate something like that with a buying group? Is it sort of that's what the franchisor is here? It's basically effectively a buying group and maybe some marketing.
I mean, I think that that's part of what they're doing. Yes. I'm not actually familiar with a buying group. And if you were to break that off and do it independently, what that would look like.
I've seen it in pool services. I've seen it where they have basically an entity that they all own collectively, kind of like you might see in farming, where they all basically collectively buy the chlorine, the chemicals, whatever they need in large quantities, and then pass along the savings to the members. So that I've seen it, so I guess it's similar to what a franchisor might do, but you've got to sort of organize it yourself.
Yeah, that makes sense.
Have you guys talked about who pays for this stuff yet? Is this entirely private pay? Is there any insurance? Is there any subsidy? Or is it just people paying via credit card? Do we know?
Well, according to some stuff I read on Twitter, boomers have all the money, so I think they're just taking it out of their
That doesn't
giant
mean they
pile of
like to
gold.
use it to pay for stuff, Michael. That's why they have all the money.
This is disability benefits growth. So projected increase in disability benefits will empower more individuals to access and afford mobility solutions. So yeah, the boomers need more money, so we need to further subsidize, their ability to get up the stairs.
The millennials are going to be needing to get up the stairs pretty soon. You better.
And Gen Z will not have stairs to get up, so we won't have that problem.
Yeah, then we skipped Gen X again. Yeah, we're going to rename Gen X the silent generation. The real silent generation is Gen X.
The funniest thing about Gen X, to defend Heather and I, the funniest thing that happened recently with Gen X was Gen X has been basically just quiet, silent, ignored for like a decade. And then the last few weeks, like some Gen Xs started to get on Twitter and on articles. It'd be like, hey, we're Gen X, this is what's going on. We're the sandwich, and each of the sandwiches is screwing us over. And then literally like 36 hours later, some Gen X gets on New York Times and writes like a scathing opinion piece about how Gen X, meaning their generation, needs to shut up and sit down and do what they're told. And I'm like, you're enabling what's going on here. Anyway, Bill and Connor are not going to find this funny. Heather, I bet you find it at least somewhat you're like, yeah, exactly. That's how this works.
Yeah. We always get forgotten and told to shut up. So there you go.
Well, so the reason I
like,
asked,
shut up, we're going to go back.
We're going to put that back in the closet a little bit. Shut up, Gen X.
Sorry, before we move on from that, my question has always been on the generational conversation is why is Gen X not as resentful towards the boomers as Gen Z is? Because the boomers are really the ones that are occupying the spaces or staying in their jobs too long and are creating this like glass ceiling based on what it looks like and Gen X are the ones that have waited on those jobs that entire time. So I've always wondered that, just to put a bow on this conversation.
We are saying that. You guys just don't listen to us.
Oh, okay.
Because we're not old enough to be smart enough that you're like, oh, these old people know what they're talking about. But there's not enough of us treating me like so.
That's right.
Anyway, I've been tweeting this for like years. Nobody cares. So, all right. Anyway, sorry.
Maybe if you tweet a few more times, Michael, people will care. But back to the pair mix on this thing, which is how I ignited this generational divide. I was thinking that could be another benefit of being part of a franchise, because if you have, payer challenges where you're like hustling to collect from insurance or from third-party payers, that is a level of scale that a level of scale and SOP, and kind of like, here's the tricks for filing the insurance right. Here's what you do when they don't pay you, or the insurance sees the franchisor's logo on the letterhead and pays timely, or maybe even they have a specific arrangement, franchisor does with the big payers. So that could be, if this is relying on third-party payer a lot, that could be a benefit of being a part of a franchisor.
Totally could. And like that's validated in the home care space directly. Like there are some that, do a lot of work with the VA and they already have those, those contracts in place, or they do a lot of Medicaid reimbursed services, and that presents advantages. I just don't know. Until you mentioned it, I didn't even think about that in the context of this business. So I don't know how much of their revenue is coming from, from insurance.
Yeah. I mean, it could be insurance, to your point, could be VA, could be veteran benefits, could be government benefits of some kind, so there's government payers, there's third-party private insurance payers. I mean, all kinds of potential third-party payers in this. So I would be curious about that mix if I were looking at buying this business, and I would want the franchisor to have a good plan to assist me with whatever my payer mix was.
I agree.
So we would talk about trends a bit. There's two trends that come to mind. One is that a lot of new homes are being built with kind of, anticipating aging, like people living in them. Like the place my in-laws live in Florida is totally optimized for like 80-year-olds with mobility issues, and they're not 80 yet. The second thing is the boomers are a huge generation, and like, are you buying this business potentially at the peak demand of this type of conversion? Because like Gen X is like generally trying to avoid this kind of like immobility type situation by and large. So anyway, just those are the two trends I'm seeing. What do you guys think?
Yeah, I think are you buying a swimming pool construction business like in the middle of the COVID boom type situation? I think is like somewhat of a parallel. could be the case. I think that the ramp for that, or not the ramp, the timeline for that kind of cycle is pretty long. So I still think that there's a solid runway, but I don't know that we're ever going to see, when we look 30 years in the future, we're not going to see the same tailwind that we see today. And so I think the question for a buyer in this situation is, are they comfortable with that? And are they going to be able to squeeze enough of that growth out before they face any kind of a decline?
Hey everyone, it's Bill, and I want to tell you about maybe the most exciting sponsor we've had in a long time on the pod. It's called Capital Pad, and it is the thing that I wish existed when I started my journey of operating and investing in small businesses. So Capital Pad is a marketplace for acquisition entrepreneurs, that is, people who want to buy a business and need capital to list their deals and solicit capital from other people who want to invest in acquisition deals. So if you want to back somebody buying a small business, Capital Pad is the place to do it. And if you want to buy a business and need capital, you can go on Capital Pad to be introduced to investors. So the really great thing too from the investor side is that Capital Pad takes care of all of the details that can get hairy with small business acquisitions. They handle standardized terms, standardized governance, standardized distributions, all upfront in black and white. Basically, Capital Pad professionalizes investing in small businesses. And the returns can be really, really good. I'm so stoked they exist. It's founded by my friend Travis, who is a phenomenal entrepreneur in his own right. So if this sounds like something that's appealing to you, if you want to buy a small business and need capital, or if you want to invest in small businesses, go check out capitalpad.com and tell them that Acquisitions Anonymous sent you.
Are you guys sure the client is coming here? I mean, I thought the kind of aging in place trend and the explosion in cost of assisted living and all that stuff would actually drive this positively over time.
I think that's actually a really good point, because you're right. It's not just the demographic trend as much as it is, where are you aging between in a facility versus at home. And so, yeah, it's a great point. I don't know those numbers. I should.
I don't know those numbers either, but I mean, I have heard about the trend of aging in place, which more and more people are trying to do, and which this is directly enabling. I mean, that's what this business is.
So the question would be, is if the market share of aging in place versus aging in a facility is shifting at a larger rate than any level of demographic decline on that side of it, then it could be well positioned to continue.
And I think geographically matters here. Where are people of a certain age moving? Where are the retirees living? And of course, aging in place requires that you have a place and the financial resources. So it has to, hit a certain socioeconomic type of client. But I think, where it is, Southern Virginia and North Carolina probably is in a great spot, probably a good market for exactly that.
Anecdotally, as a Gen X and with other Gen X I talk to, most of them would be excited. And Heather, you may veto me on this opinion, but of people I know, including myself, I would be excited to move to some place like these senior communities. They seem super fun. There's a bunch of people around, they're doing the same stuff. I don't want to be alone in my 70s in my house all day. That doesn't sound like fun at all. I want to go back to summer camp, and that's what seems like all these boomers are doing. So anyway, that's just a negative for me in terms of Gen X's kind of generational attitude towards this stuff. I'm not quite sure it's a high growth market in the future.
I'm sure there is data on this, and I just don't know it. I will say my grandmother is over 90 and she lives in a retirement community, and it seems awesome. I want to move in. They've got a chef, they go eat dinner together. They got activities. It sounds amazing. I would definitely love to live there.
My in-laws live in this one in Florida. It's like summer camp. They, there's today we're going to go on an adventure. I'm like, this sounds awesome. Let's go do it.
Yeah, they do field trips. They go see plays and stuff, and it seems awesome.
Have you heard some of the stories about coming out of the villages in Florida? They
which ones?
They party they can put some fraternities to shame, based on what I hear about some of the debauchery that happens there amongst the boomers. But they're enjoying themselves.
Bill, am I allowed to talk about the anecdotes about STD rates at these places?
I have heard the anecdotes. I have heard these anecdotes.
Go ahead, Heather.
Yeah.
You seem to have heard them.
No, I just said I knew we were going there. I was worried about that when Connor
Way to
brought it
go,
up.
Girdley. Welcome to the podcast.
So it's like not just summer camp. It's like summer camp.
It's like
now we know why Girdley's so excited to move
yeah.
into retirement.
That's right.
lucky for you
That's
guys, Mrs. Girdley is not a listener. So, but if you're listening, honey, not that reason. It's because I want to
Not
play
the
beach
reason.
volleyball with the other.
Yeah.
I mean, I like this business. Do you guys talk about the potential for recurring revenue here? I mean, if you install, like, is there some maintenance here? If you get the house all tricked out and then, the chair needs annual certifications, or, it's sort of like an elevator type situation. You got to inspect it.
That was the first 5 minutes of the podcast. I went straight there.
Okay.
And I think that's an open question. We didn't have an answer. Yeah.
Okay.
Yeah.
Fair enough.
In fairness, to Michael's earlier point about how Michael doesn't use his elevator very frequently, I would say to that, like, you're not really the target audience for, to have an elevator in your home. I think that if you had the elevator installed for the purposes of using it, you probably would see more maintenance from it. So yeah, we don't know from this business how the revenue's broken down, but there probably is something residual there.
So let's talk about the financing, if you don't mind. They mention, they basically mention the terms of an SBA loan without calling it an SBA loan. So I'm assuming that's kind of what they meant there. Financing, and they showed it 120 months, 10-year loan, 10 and a half. It would actually be a little bit lower rate. Hey, prime just dropped. So SBA rates are down a little bit now, which is nice. I think that there's just two things that a lender would have a hard time with on this one. And not to say that they wouldn't do the loan, but these are the two things that they would question the most: the payer mix and the risk of any kind of changes in reimbursement rates. So in other words, if a lot of the revenue is tied to insurance, they're going to want to know what's the history of changes in those reimbursement rates. Have they been coming down? Have they been staying stable? And what do we think the future looks like? Are they going to continue to get paid at the same rate? And then they would also press on percentage of project work, which I think we think is pretty high. And just sort of understanding how long, how do they have good revenue visibility? If you're tied to all project work, how far out can we see what sales look like? What does the marketing look like to keep that project work coming in consistently? And those are the two things a lender would care about the most. They might allow a lot of different types of buyers here that don't have, quote unquote, direct industry experience, especially because it's part of a franchise system. That actually helps overcome lack of industry experience a lot of the time, because they're going to be supported by the franchise system. So, that's kind of the positive for a lender here.
And what do y'all think about the asking price? Or Heather, what do you think about, how bankable this is at that price?
What is that, 5 times? I can't do my math in my head today.
That's just over 3.
Oh,
right?
Oh, sorry. Yeah, it's under $1 million. And that's SDE. So, it's really probably 740 SDE. They're asking $5 million. I think that, it's project work. Yeah, go ahead.
They're asking 2.
Oh, I'm sorry. I'm looking at the wrong
7.
thing. I'm looking at,
Yeah.
Yes, sorry. That's what the problem is. Okay. I think anywhere between a 3 and a 4 is kind of where I see most businesses that are SBA size. And I think that's probably a fair price. That's my guess.
I would also want to talk to a bunch of other franchisees in the area, because I first want to know why one of them aren't buying it. I mean, that would be, anytime I would be looking at franchise, I always feel like the other franchisees are the buyer of first resort, nearby, right? You already got 4 of these and 3 of them in your adjacent territory come up. You should be able to pay the most. You should be jumping out of bed to buy this thing instantly. So I would probably right away call that guy and go, why are you not buying this?
Agreed. Yeah.
We are coming up on typical time end, and I think we've gotten to this pretty good. Do you guys want to go around the horn and give your thumbs up, thumbs down? Heather, would you be interested in going first?
Yeah, thumbs up. I think it's a good one.
Wait, everybody calm down. Heather liked the deal.
Heather likes it.
Heather liked a deal without a horse involved.
Heather will do your loan for this one.
Yep, I will.
Wait, are you allowed to broker your own loans?
Well, I'm brokering somebody else's loan, but you mean like if I bought it? No, I guess I couldn't really broker my own loan.
What if
They
this
wouldn't-
was mobility solutions for horses? Would you buy it then?
Oh, yes. Then I would totally buy it. Absolutely. Yes.
Awesome. Bill, where are you on this one?
I'm thumbs up at least on getting the teaser or getting on the sim rather. There's a lot to potentially like. I need to explore it more.
Yeah, I'm in the same place. Thumbs up with some open questions, but it seems like we know what all the questions are. So
yeah, it's about the end markets. It's about the payer mix and kind of the durability of it. But this could be really good.
Connor, where are you?
I'm a thumbs up. I think it's, I love the home care industry overall just because of a lot of the reasons we've talked about. I just know I'm not the right operator for it because it's just more people intensive than my preferences are. So I think this is a cool opportunity to gain some exposure there without the people operational challenges that come with home care directly. And I think it's priced appropriately. And I like it.
Yeah. Is this one you represent or do you represent something similar to this?
If it's the one that I think it is, it's not one that I work with, but they're still highly reputable.
Yeah. Super cool. All right, everybody. Thanks for being here. Great episode by everybody. And Bill, glad you got your technical difficulties fixed. And my technical difficulties are still difficult. So we'll get it figured out for the next one.
Well, you are Gen X, so that makes sense.
All right, everybody. If you enjoyed this episode, please tell a friend about it. The podcast is growing, but we could use your help in growing it even further. The best way to do that is go to our website, ACQUANON. It is not a QAnon site. It is a business buying podcast site. And you can sign up for our newsletter, which surprisingly has like a 75% open rate, which is incredible for a newsletter. And I think it's just a testament to how good the team is doing putting that together. So please subscribe to that, and we'll catch you next time.